Mercado Libre is sometimes called the Amazon of Latin America because of how similar their businesses are, but I think it would be a little more accurate to call it the Amazon and PayPal of Latin America because it also delves into financial services in addition to e-commerce and logistics. Regardless, investors are interested in this growing company and are asking me if Mercado Libre stock is a buy at current prices. I'm going to answer that question in this video. To do that, I'm going to review the company's revenue growth history, look at its operating profit margin expansion, look at the returns on investor capital. Then I'm going to look at my proprietary discounted cash flow valuation that I created for Mercado Libre to see the fair price per share according to that calculation. And then I'm also going to look at valuation, measuring it by the forward price to earnings and the price to free cash flow. So we're going to see three different perspectives on valuation for Mercado Libre stock. And in some, I'll answer at the end if I think the stock is a buy, hold, or a sell at its current price.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so looking at a 3-year history of Mercado Libre's revenue growth, we see a company that's growing very nicely, even though the growth rate is decelerating. 37% revenue growth in its most recent quarter. I talked about how it's sometimes called the Amazon of Latin America. Well, Amazon's revenue growth was only a fraction of this 37%. Amazon's revenue growth was less than one third of what Mercado Libre grew in its most recent quarter and its most recent year and 3 years, right? Mercado Libre is growing much faster than Amazon. And part of the reason for that is the Latin American economy is growing much faster than the US economy, where Amazon primarily operates. Amazon's business is international, but the core market is the United States, as Mercado Libre, it's in Latin America, but the core market is in Brazil. And so those markets are growing much faster than the markets where Amazon is operating. Additionally, not only is the overall economy growing faster in Latin America compared to the United States, but also the segment, the e-commerce segment, is growing much faster than the e-commerce segment in the United States. And the financial services segment is growing much faster vis-a-vis the United States. So in all the categories that Mercado Libre is operating in, the growth rates are much better than the comparable growth rates for Amazon. And the growth rates are very, very attractive at over 37%. Mercado Libre's operating profit margin has continued expanding up to 12.66% in the most recent trailing 12-month period. In fact, these operating margins are close to or better than Amazon's operating profit margins, just to highlight how effective Mercado Libre has been in growing the business profitably and not just looking after growth for growth's sake. You know that I'm not a fan of those kinds of companies that are just going after revenue growth or customer growth without thinking about profitably growing. I've talked about several companies that created disasters for investors because investors got too excited about a company's revenue growth without looking at if that revenue growth can persist, whether or not it's on sound foundations. Because if a business is not growing profitably or is growing inefficiently, then the likelihood of that growth continuing is minimal, because eventually the company will have to raise prices or reduce services and it'll lose customers. Whereas a company like Mercado Libre that's growing profitably, it can continue on this path for a very long time because it's a sustainable path. And on top of that, the tailwind from those broad market forces I talked about earlier, the growth of e-commerce, the growth of financial services in Latin America, those are likely just underway. Those have several years, if not several decades, of growth ahead before those markets become saturated with all of the customers and all of the customer spending that's expected to divert to those categories. And when we look at its returns on investor capital, I see one of the best charts I've seen according to this metric in how sustainable and steady its improvement has been here. The return on investor capital of 22.5%, I've seen better returns on investor capital, but at the same time, the steadiness of this improvement is what impresses me. And the fact that it's been able to grow from -8% to 22% in 5 short years is also impressive in the categories that it operates. These are not asset-light categories. Mercado Libre does indeed work inside of the logistics fulfillment networks that are more capital intensive and more difficult to operate. And again, it's doing a good job of that, expanding this metric. Comparing the returns on investor capital to the weighted average cost of capital, it's more than 2-to-1 ratio for Mercado Libre. That's an important thing I look at when I'm evaluating a stock and whether or not to rate it a buy, hold, or a sell. The ROIC to WACC ratio is an important one, and Mercado Libre's is excellent at over 2-to-1. Furthermore, when I calculated the intrinsic value per share for Mercado Libre stock, I came to $1,884 per share as a fair value. The current market price is $2,134. Now, this is within my margin of safety here. I like to have a margin of safety of 5 to 15% for more volatile businesses that I'm less certain about. And Mercado Libre fits into that category where I'm less certain about the company's growth trajectory. While the expectations are very strong for the Latin American economy, the economy is a lot more volatile than the US economy. And so it can have this sudden and sharp decline in economic activity without the stabilizers that are in place for the US economy and more mature economies. So for that reason, I would like to have a larger margin of safety here for Mercado Libre. I wouldn't jump to a conclusion and say it's overvalued based on my DCF. I would be in the middle between slightly overvalued and fairly valued for Mercado Libre's business. And when I'm dealing with an excellent business, which I do believe Mercado Libre falls into that category of excellent businesses, when looking at revenue growth, profit margin expansion, returns on investor capital, the categories it's operating under, I do believe Mercado Libre is an excellent business. And so I would be willing to pay a fair price for an excellent business. But that's just one valuation method. When I look at the company on a forward price to earnings and price to free cash flow basis, it looks cheap on these metrics. So on a forward price to earnings of 33, this is near the cheapest you've been able to buy Mercado Libre stock. And for a stock with its profile of growth and profit margins, you'll scarcely find a business selling at these valuations, and especially at the price to free cash flow of 15, you'll scarcely find a business with these metrics selling at these valuations. So all of which leads me to the conclusion for evaluating Mercado Libre stock on a rating, whether I'm looking at buy, hold, or a sell. I'm rating Mercado Libre stock as a buy at current valuations. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.